Hey, it's Susan Hable with RVA Fractional Accounting. Today is Tax Tip Tuesday, January 24th, 2017. Today I'm going to talk about deducting medical expenses on your tax return. I've had a couple of questions about that lately, so I wanted to give you a little bit of quick info on that. It's based on your AGI, your adjusted gross income, so you can deduct medical expenses that exceed 10% of your adjusted gross income. So for example, if you have adjusted gross income of $45,000 and $54.75 of medical expenses, you can only deduct what exceeds $4,500, which is 10% of your $45,000. So in that case, you can only deduct $975 in medical expenses. So the first $4,500 you can't take. I've found that a lot of older folks tend to be able to use this medical deduction because they have a lot of prescription drugs, a lot of doctor payments, a lot of co-payments. Most people that are pretty healthy and have health insurance and don't have, high co-payments probably will not find that this is a deduction that they can take. But if you have a lot of medical expenses, it's worth checking out. Now, here's a couple of things that I wanted to tell you about. I'm looking at some resources so to make sure I give you all the good details. So you can deduct preventive care, treatment, surgeries, dental and vision care, psychologists, psychiatrists, prescription medications, and glasses, contacts, false teeth, and hearing aids. You can also deduct the expenses that you pay to travel for medical care, for example, the mileage to go to the doctor and back. Now, what you can't deduct is anything that's already being reimbursed by your employer or by insurance because you didn't pay for that. You've been reimbursed for that. You're not out of pocket. You also can't deduct, mostly, generally speaking, anything cosmetic. And about the only non-prescription drug that you can deduct is insulin. You can't deduct toothpaste or health club dues or vitamins or diet food, non-prescription nicotine products, or anything that wasn't paid in 2016. So one thing to remember is you've got to be able to itemize your deductions. If you don't itemize, you can't take this deduction. And for a lot of people, the standard deduction is just a better fit for them anyway. But I just wanted to give you a little info on that. If you have any questions, anything in particular you want me to take a look at for you, I'm happy to look into it and get you some more specifics. So that will be my Tax Tip Tuesday for today, January 24th, 2017. I'm Susan Hable with RVA Fractional Accounting. And if you find that my information is valuable to you, please like and share it. I would really appreciate it. Thanks. See you next Tuesday. Bye-bye.